Rand trading slightly weaker this morning, R6.72. We had it dipping back to 6.68, 6.69 on Friday. That's the best level since the beginning of the year. Really just the risk on coming back into the market.
We see that the bias is expected to remain in favour of extended Rand bias, extended Rand strength over the short term. Rand strength persisted on Friday on the back of both domestic and international data, and we saw upbeat remarks by the Finance Minister, Pravin Gordhan, about South Africa's GDP growth rate. We also saw better than expected PMI data, which together bodes well for the Rand. We see a trading range of about 6.68 to about 6.78 for today.
How about the global factors? We also had the US jobs data out on Friday, and that followed a week of positive jobs data out of the US, so that's really fueling a bit of risk appetite in this market.
Indeed, we did see the jobs data come in much better than expected, with an increase of about 216,000. We also saw the unemployment rate decline to about 8.8% from the previous level of 8.9%. So that all altogether encompasses better growth and risk appetite for international markets.
As you mentioned, the Finance Minister speaking about growth prospects for next year is looking at 4.4% growth for 2012. At the same time, also talking about the fiscal deficit at 5% of GDP for the past financial year, and that's down from the 5.3% that had been forecast. So really SARS collecting more taxes than expected again.
Indeed, yes, we do expect the deficit to come down to about 5%, as you mentioned, and that really sends a signal that the economic recovery in South Africa is improving, and that we could see growth of about 3.4%, as they mentioned, for this year. I think expectations of about 4.4% for 2013. So on the whole, we expect good economic growth coming forward.
And do you think that'll be reflected in car sales figures for March, those numbers being released by NAAMSA later this morning? And we've seen some nice momentum building up towards the end of last year into the beginning of this year. Can we maintain that momentum?
Yes, I do think we can see that momentum increasing. If you recall, on Thursday, we saw private sector credit numbers come out, with installment sales being one of the drivers of that number. We saw installment sales credit increasing, and that's really one of the proxies or measures for what vehicle sales has been doing. We also saw vehicle sales increase to about 25.2% in February, and we expect that number to have improved. Export growth of vehicles has also improved quite considerably, and we expect that to continue improving into March and for the remainder of this year.
I suppose on the global calendar, the main things to look for this week are those central bank meetings, particularly the Bank of England and the European Central Bank. What are you looking for there?
The ECB is expected to increase rates by about 25 basis points this week. We don't expect the BOE to change the interest rate view at this point. I think they will remain cognizant of the fact that economic growth came in much lower and contracted in the final quarter of this year. So they'll be aware of hiking rates at this point so as not to derail the economic recovery.